All right. So the rules for today. So today, Adrienne is going to be our teacher. And the rules for these Sunday calls for everybody that's going to be teaching, everybody has to teach or you're going to get the boot. Okay. Okay. Um, so the rules for these sessions is one, I'm not going to answer any questions. Two, you're going to have to teach it as if you're teaching a beginner. I am the beginner. I'm a beginner student. I know the only thing I know about trading is the basic. I know what a pip is. I know what a lot size it, like I know all the basics of trading. You, as the teacher today, Adrienne, are going to have to teach me the basics of market structure, price action. You don't have to do you don't have to do the cycles, but I want you to just teach me the basics of price action. If anybody has a question, they have to ask Adrienne. If Adrienne has a question, she has to ask the rest of the group. Fair enough?
Sounds fair.
Okay. So you ready, Adrienne?
Yes.
I'm the beginner. Okay, go ahead. And I'll probably
Okay.
ask some questions that I think, some beginner that I know I asked as a beginner. I will probably ask those questions along the way. So then we can get started.
Do you see my screen? My USD screen?
No, no, I see your school.
Okay. Share screen. What about now?
Yes. So, and then the first thing I want you to do before we get started, because I don't want you to, I was going to say, I don't want you to remove your drawings.
Okay.
So if you go up to not that one. What's the, where it says indices?
Oh, here.
Do the drop down and, if you can load a new layout,
Okay.
create a new layout. There you go. Right there. See, right there.
Okay.
Yeah. And then just name it. You can name it Elite or whatever you want to name it.
Um, Elite. Okay.
And then save. And then you can go to another chart, like create a new, chart so that you don't have to
Is there a
erase.
certain pair you want me to do?
Oh, yes. No, I'm gonna let you decide what pair you want to do.
Mhm. Okay. Well, I'll go back to GJ. 'Cause I am going to trade that this week.
Okay. I think it was down. I think you just passed it. There it goes.
Yeah. Oh, I don't like this layout. Let me get rid of this stuff.
So for that, look to the, yeah, there you go.
My screen is black, dark. I don't like that. Let's change that. Um,
So can you explain to me what you're doing?
okay,
Uh,
yes. My screen
for
is
the
gray in
newbie.
the back,
Okay.
Kim. And I like mine to be a little light. So I'm going to change it from gray to white. You see the change?
Uh-huh.
Yeah. Also, I don't use green and red candles. I use blue and black candles.
Okay.
Blue would be my green, which is a buy. Black would be my red, which is a sale.
Okay. Okay. Got
Okay.
it.
So we're going to start with the monthly because starting, let me make this a little bigger. Starting with the monthly, Kim, that gives you the big picture. And what I mean by big picture, it shows you one, I look for the bias. And the bias mean where is the market going as a whole? And the monthly chart will tell you that. What I see on the monthly, I'm going to use my path tool right here, okay?
Mm,
I see, okay, let me hold up. My path tool uses me, okay. So I see price pushed up, price pushed down, and it took out this, it made market structure, right? And
mm.
market structure means it
So
changed
I was
from
gonna
going up,
I was gonna ask, what is market structure?
yeah, price changed from an uptrend to a downtrend. So that means that the sellers are in control now. So
Okay.
now price is pushing back up because the buyers are in control. And that's what the market does all day. It either goes up, down, or sideways.
Okay.
Make sense?
Mm-hmm.
Okay, so now price is up. It didn't take out any high over here. Price pushed down, price pushed up. And I do this so that I can see where I am in the market. What
Mm-hmm.
this is telling me is that prices in an overall uptrend,
Mm-hmm.
although we have 1, 2, 3 months of going down, currently it's going down, but the overall big picture, Kim, the price is going up. And another way I see that the price is going up is because of the pattern that it's giving me. And it's giving me a W, which means that W, which is double bottoms, and you'll learn about that later as you stay in the course. That means the price is going up. Okay. So what I look for on the monthly is my swings, right? And my swings mean my high swings and my low swings. Don't get confused with that. All that is, Kim, is the high of this monthly and the low of this month. And
Okay.
how I mark that up is with a, I don't even know what you call this. Some people use trend lines, Kim. I use this bar. And what I do, I change mine to green.
Okay.
And green indicates this is a higher time frame zone. That's my high of my monthly. I'm going to clone this just to make another one. And what I did was right click, click clone, and that makes you another mark or
Okay.
a bar. And
Okay.
this is my low.
And you
And
said there's your
also,
higher time frame. What is it called? What is it called? High time frame what?
it's my monthly high and my monthly low.
Oh, okay. Gotcha.
And what I also do is I go to this text right here and I mark it monthly. If you can see that,
Mm, okay. Yeah.
okay? And I mark it down here. Okay.
Okay.
Now I see a key level, and our instructor teaches us about a key level in the market. She also teaches us about imbalances and order blocks, and you'll learn that as we go. I'm
Yeah.
just going to point it out for you if you don't mind. I see an imbalance here on the monthly. I'm just going to mark that. This is an imbalance, also an order block, and this is a horizontal line. I'm sorry, all your tools you're going to be using is going to be on your left-hand side, Kim.
Okay.
When you mark the X, when you mark the stars, then it makes the little saving, it saves it down here in your toolbar.
Okay.
When you double click on it, you're able to type anything you want on it. I'm going to type imbalance, M for imbalance. Okay. And I also see, I'm going to mark this. This is a good key level. And a key level means an area in the market where price has touched multiple times. Usually when price touches a zone multiple times, that's an indication that it may come back to that zone again.
Okay.
Okay, so now I got my monthly levels. I know the price is in the overall uptrend, but the last few months has been coming down. So price is dropping. I'm going to drop down to a lower time frame, Kim. Up here in your top, you see where my cursor is circling? I'm just going to change charts from to a lower chart, which is going to be a weekly.
Okay.
Okay, so I'm going to reset my chart. And that just means getting it to open up a little bit. So this is the weekly. Okay. This is the high of my weekly, just like there was the high of the monthly. And this is, let me see, Kim, hold on. Ira, can you help me? I think this is
What are you trying to mark up?
my low of the weekly. I'm thinking it looks like this, because well, the monthly is,
You said the low of the weekly?
yeah. I'm thinking this is it here.
Sure. Yeah.
Is that right, Ira?
Yeah. Was the
Okay.
last weekly swing?
Yeah, the last weekly swing. I just need a clarification, Kim. The last weekly swing is here. So all I'm going to do is mark up that swing using this bar over here.
Okay.
And I use that color to be green also. I use my monthly and my weekly green. And then as I go down lower, I change my colors.
You change the color of the zones.
Yes,
Okay.
as I go down.
Okay. Now you put daily. Is it
Oh, I'm sorry. It's weekly. It's weekly. Thank you, Kim.
oh, okay. I was just checking.
Thank you. I'm nervous. Okay, so that's the weekly. Okay, so and this is a good key level here for my weekly. And that just means where price has touched multiple times. I don't want to make another box. I don't want my chart to be, I'm learning to not have my chart so cluttered.
Okay.
Okay, so now I have my weekly, I have my monthly zones. Now I'm going to drop down to my daily.
Okay. So what do you call it when you're going from the monthly, the weekly, the day? Like what is that? What is
It's a top down analysis. That's what
okay.
it's called.
Okay.
Yeah. Okay, so this is my daily. Hold on.
I have a question.
Yes.
So when you were on the monthly,
Mm-hmm.
and I know you said I would be learning it like later, but you
Mm-hmm.
did a monthly imbalance.
Mm-hmm.
I think it was at the top.
Yeah.
Where, what is that? What is the monthly and like what is it
Um, I
that you
say
what
the
is it
easiest way,
that is an imbalance?
the easiest way for me to explain to you, it's like well, it's a magnet where the price may gravitate back to. It's also money in the market. That's money that price is gonna go back and collect at some point in time.
Okay, and what is it about that particular zone right that you have marked up that makes it
It hasn't been mitigated, which means the money hasn't been taken. So there's money still in the market to be gotten. if that makes sense.
And what hasn't been mitigated? I'm trying to understand.
This
What?
imbalance here is an open imbalance. Actually, this whole area here, this area, that means that price can come up here. And when price comes up here, it takes the money that's in the market. We look at it as a candle, but it's actually money in the market.
Okay, I'm gonna pause as a student real quick.
Okay.
Can anybody speak on what I'm trying to get to?
Kim, what are you asking? You're saying what is an imbalance? What was your question? Sorry.
I'm trying to understand why she marked that up as an imbalance.
It's the order block. The
Huh?
imbalance, it's a little further down, the imbalance. You marked up an order block.
Yeah, I agree. I don't see an imbalance in that area.
Right there.
An imbalance to me is a gap. And I don't see a gap in the area that Adriane marked.
Imbalance is right where she put it this time.
Oh yeah, you're right, because this candle and this candle covered that. You're right. You're right. So you're talking, this is the imbalance, correct? Because this is a gap.
Yeah. You're probably in the middle of it, I think. Yeah, I'm gonna put a square over it.
I'm sorry?
From the candle above the one you had marked, down to the third candle down. Might have got
Here?
50 refilled. Right here where you at. Oops.
Okay.
I don't think I can mark on the screen.
But are we in agreement that this is the imbalance?
It is, yeah.
Yeah. Okay.
What is you the imbalance from the order block, the wick of the order block down to the, well, if you started, I'll tell you where I would end it.
You need me to mark something?
If you grab the box, I can like kind of tell you to bring it down and put it up there.
This one here?
No, the box. Oh, you don't mark your imbalances with this.
No, I'm trying not to have so many boxes. So I try to use the horizontal lines to try
I mean,
to keep my.
you have your line in the middle of the imbalance here already.
I didn't hear you.
You have your line in the imbalance. It's in the imbalance. Your line is in the
Okay.
imbalance.
Okay. I think Kim was asking, what does the imbalance mean? Right, Kim? I don't think I was doing a good job of explaining what the imbalance is.
The,
A gap in the market.
Oh, I'm
yeah,
sorry. I was on mute. I was on mute. Sorry. I was asking when you marked up what that imbalance, what exactly were you marking up? Like I didn't understand what was what that imbalance was exactly.
Order blocks and imbalances have to be filled.
Okay.
So price has at some point in time has to go up to this particular area up here, or either here, where I have my monthly high.
Mm-hmm.
It can even go up here at some point in time, which means it's closing the gap, or it's mitigating the order block.
Okay. So when you say the gap, can you show me what you mean by the gap?
This is a gap in the market. This is when price has zoomed up fast and left a gap in the market.
Okay.
This is one here, Kim, but this is halfway. Price has already come up here halfway to this imbalance or order block. They call it order block, they call it imbalance.
And what exactly is an order block?
An order block is in this case here, a bearish order block is the last green candle before the red candle pushes down, or the last green candle in the market before the red candle takes over, or the last,
The green or the blue?
the blue, I'm sorry, the blue.
Okay. 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 So it's a I think I've heard of that. I think I read about it. So it's a you have a candle that pushes up and then an, another candle that pushes down.
Mm-hmm.
Okay.
Yeah. Make sense?
Yeah, I think so.
Okay.
Mm.
So I'm gonna go back to the daily. This is where we left off at. And I mark my highs and my lows of the daily, which is the same as my, yeah. It's my weekly. This is the last swing of the daily here, which is close to my weekly.
And
So
when
in a
you
case like
say swing,
the high and the low of that particular chart. Remember the monthly and the weekly, I mark the high and the low.
mm-hmm.
It's the same for the daily. I mark the high and the low. And sometimes the bars can get on top of each other. So I don't mark it. I'll just use a line
Mm-hmm.
because it's so close.
Now you mentioned something about a swing before, and I think it was on the higher time frame.
On the monthly. Yeah.
Or was it the monthly or was it the weekly? I think it was on the weekly.
The weekly.
Oh yeah, you marked it up. Okay. So when you say swing, so you marked up on the weekly, you marked up the I have in my notes that you marked up the weekly swing.
Mhm. The high and low of the weekly.
Mm-hmm. Okay. So based on that, like what are you expecting for based on the weekly swing, what exactly are you expecting from that weekly swing?
Um, well, I, I trade in between from zone to zone.
Okay.
If price goes, if price have a, if price pushes out of this weekly, which is a strong weekly zone, makes a retracement, which means it comes back to this point where it broke out at and
Mhm.
continue up. This is telling me price wants to buy. If
So,
price comes here,
mhm.
sorry.
No, I was gonna say, so you're saying from zone to zone, right?
Mm-hmm, mm-hmm.
So what are you waiting for? You're trading from the one green zone to the next green zone?
Yes, from here to here.
Okay. So are you waiting for price to get up to that zone, or are you waiting for price to
Yes, you have to wait for price to get to that particular zone to show you what it wants to do. That's what I was saying earlier. If price happens to break that zone, which is a strong weekly zone, then that's giving me a strong indication it wants to sell.
so
If price
how
comes in,
long would you have to wait for a price to get there?
well, this is a weekly chart, so it may take days if I'm trading on the weekly chart.
Okay. Can it take weeks?
Yes, it could take weeks.
Okay.
And that will be considered a swing trade, which means it's a longer trade. It may take longer to play out.
Okay.
So we mark the zones on the higher time frame so that we can, when we get to the hour and the 15-minute time frame, the 15-minute time frame is where we're going to actually do the entry. We'll enter in on the 15-minute time frame, which is a shorter time frame, and we watch the market on the 1 hour, but we still mark up the higher time frame zones because price will eventually get to those zones. We just don't know when.
Okay. Okay. So I think I'll ask because you're still, what was it called? Top-down analysis?
Yes.
Okay. So okay, I'm gonna wait for um now you also marked up another weekly level, which was the weekly, I think, and a daily. I'll ask it later.
Can I ask a question?
Yes.
Okay, so we discussed imbalance on the monthly. Is there an imbalance present on this weekly chart?
There's a little imbalance here.
So from what I understand imbalance to be, like I said, it's a gap in price, and it's normally, it starts with 3 candles as the base. So you have a first, second, and third candle. And the wick of the first candle when the wick of the first candle on the bottom side or top side, depending on which way you're looking at price, doesn't meet the wick of the third candle, the gap in between those two is what is to be considered the imbalance. So for instance, where you just marked, yes, that is the imbalance. And from what I understand, when you're marking an imbalance, it's best to use a box because then you can establish where the 50% is, which is something I've heard people talk about, like consequent encroachment, which is like the 50% of the imbalance. And when it feels that, it's normally considered filled, it could fill it and react from that area, and it could not react at that area. So that's what I see an imbalance in. I didn't see what you currently have marked or what you marked on the monthly as an imbalance. The line that you had was like in the middle of the imbalance.
Okay, let's go back to the monthly.
It's further to your left, I think.
I don't even think I have it marked there.
You gotta squeeze it.
I think it was on the top. I think it was over on the other side.
Oh, yeah. I gotta go over. Yeah, I gotta go. Okay. Okay, so we have 3 candles here. So, how did I do the other one? Okay, top. No, here. So the imbalance is here on the monthly.
Okay, so the gap.
The imbalance, yeah,
Okay.
right. The fair value gap, the gap, yeah. And I don't know who that was explaining that to me. I didn't know that that could be a part of the 50%. What were you saying? I didn't know that, but I will mark it because
so the 50% is can be called consequent encroachment, and when it gets to that area, it could react as an area for price to reject from.
Yeah.
It's also considered when it fills 50%, aka the consequent encroachment. That particular imbalance is considered filled, but that doesn't mean that it won't come back and completely fill the imbalance. Like you said, it could react at the 50%. AKA the consequent encroachment.
Yeah, and I hear her talk about that too. And that could mean half of this candle, correct? It could come up and fill
half,
half.
Half of the box. I wouldn't say candle, but half of the box. Whatever you have marked as the imbalance, that's where that will fall at the 50%.
Okay. Thank you.
You're welcome.
I hope we didn't confuse you, Kim.
No, but I think I heard some, so it's the bottom, it's the three candles. So is it the bottom top of the three? Is it the wick or is it the?
It's the wick.
Okay. Okay. So
it's the wick of the first candle, and it's the bottom of the wick of the first candle. I think the top of the wick of the third candle. Am I correct, guys?
So the
no, it's 1, 2, 3. So this wick here is the bottom, and this wick here will be the top.
So the gap has to be present in order to. I'm driving, so I'm gonna try to. I don't think I have annotate on my phone.
That's okay.
Right now, let me see. 4 meetings. Is this it? No, that's not it. What's this? That's not it. Oh wait, I think I found it. Okay, so hopefully I'm not gonna scribble too bad on the screen. Oh, see, look, I'm scribbling already. Hold on. Okay, so for instance, I'm gonna pick a different area to mark. So this would be candle number 1. This would be candle number 2. This would be candle number 3. So we have a gap. So it's the bottom of that wick, the top of candle number 2 wick, and that would be the imbalance. And this would be like the 50%. So there's an imbalance, and there's also another imbalance below it. So we would then take the wick of this candle, the wick of this candle, and that would create
I'm sorry.
an imbalance.
Okay, because I was thinking about the 3 black candles. Okay. So it's safe to say the bottom of this candle are here, and the top of this candle here. Is that what you just said?
I'm sorry. Show your candles. What?
Right here. So you said 1, 2, 3. I have 3 candles here.
But you have to have a gap. The gap is what's considered the imbalance. I don't see a gap in those candles. And like I said, I'm driving, so my eyes.
Oh, okay. So maybe there is a gap. Okay.
Adriane, you have a long wick in between that. Do you see the wick of that candle? That's why that's not a gap.
Okay, I do see that. So I'm taking this off. So this wouldn't be an imbalance here.
That is. The one above that is not.
This is here.
No, that the one you had was fine.
Okay. I was trying to make sure that it is an imbalance by marking it, because I want to be sure that it's an imbalance. And based on what she just said, okay, these are my 3 candles here.
Which ones are your 3 candles?
One right here, 1, 2, and 3.
Okay. And okay, I'm gonna take my student hat off. Why are you counting those 3 candles?
Because the imbalance is right here on the third candle. So
it has to be the first, the second candle. So where's the gap?
The gap is here.
Okay. So where's the first candle that did not get mitigated that started the gap? Where's the first candle that started the gap?
Okay.
Not that one. The first candle that started the gap.
Going down. This, okay, so this candle here.
Started the gap.
Okay.
So these candles right here don't mean anything.
Okay. 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 And the top of this candle here, which is the third candle,
Mhm.
and that's why it's a gap.
So where's your first, where's your second, and where's your third candle?
Okay, this is my first. See, this is my first.
Which
No,
one?
here,
Okay. And then where's your second candle?
2,
Okay. And then your third.
3.
Okay. Yes. Okay.
Okay.
And then between those three, there was a gap.
Mm-hmm.
So that would be your imbalance. But
Okay, I've been doing it wrong. So I'm glad I'm doing this because I thought this is an imbalance to me. I have been marking like this is an imbalance, and that's an order block, is what you're saying.
that is an order block, but it doesn't have an imbalance. So this
Okay.
candle has already been mitigated by this
Okay.
candle right here.
Yes, because that wick is
Mhm.
already touched it. Okay.
Mhm. And that's what, Todd always calls that the healthy price action.
Okay.
Okay. So
Yes.
now that you have your
Oh, I'm sorry.
now that you've identified the three candles,
Mm-hmm.
three what caused the imbalance. So
Yes.
you like here and here initially was the imbalance, and then price came back into that imbalance before selling off.
Yes.
That is definitely like an ICT move. So if you, before these candles pushed up, if you had marked up from here, drew your box, your imbalance box from there from there to there, that's where you need to. So from the bottom of this candle here to the
Okay.
top of this candle here, that would be where you would mark up your imbalance.
Okay. Which is going to be huge when I drop down to lower time frames.
It is, but I want you to pull the left
Understand.
side over, pull the left side over, just one more time, two more times.
This.
No, your
Oh, here.
imbalance. One more time.
Okay.
There you go. There you go. Okay. So now you can see exactly where your imbalance started and where it where the 2 points are. Okay.
Yes.
So now that the imbalance has pulled into that zone, you can narrow the next imbalance. So now you can narrow down your next imbalance. So you will take the bottom of your imbalance box, that zone.
Okay. The zone.
You can take it. So yeah, you're gonna take the box.
Oh,
There you go.
okay.
So now that is an area that needs to be mitigated.
Okay.
Okay.
Yes. Okay. I've been marking mine wrong all this time.
That's okay. That's what we're here for. That's what
Okay.
we're here for.
But now I got it. It's nothing to do with
Now you
these
can,
3 candles here. It
nope.
starts here, here, and here.
Yep.
Makes
Wherever
sense.
the gap is, you count the three candles that started the gap and ended the gap.
Okay.
Okay.
Yes.
Okay. Now I'm going
All right.
back to, I'm putting it back on my student hat. Okay. Go ahead.
Okay, so we were down to the weekly, and I think someone mentioned there was one, let me make sure I have the imbalance mark here. Now that I know how to mark them. Okay, so let's see. This is my weekly. That's right. So there is an imbalance. There is an imbalance here.
Mm-hmm.
Okay, I'm gonna mark this with a, okay, I'm sorry.
So as I'm putting on my student hat, so you marked that imbalance. Are there other there should I mark like my other imbalances that are right there?
Yes. And I missed this one here.
But then there's
That
another
is,
one I think I see, but I'm not sure if it's an imbalance or not.
where do you see it at?
Um, right
Because
where
this is
not no, not that one, but I think I see another one that's I guess yeah, maybe there.
here,
No, not that one.
here.
I think yeah, is that an imbalance?
No, this is not an imbalance.
Why is it that one an imbalance?
This is an order block. This is a bullish order block.
But then the last weekly candle didn't touch the first candle. It's got three candles. If I'm going off what you guys are saying, it's got three candles that did not get mitigated.
One. You talking about the imbalance between here?
Yeah, is that an imbalance?
I wouldn't have marked it, but yeah, it's a gap. It's definitely a gap.
Like Rich said, I agree that it's an imbalance in an order block because you can have both.
Mm-hmm. Yeah, but that's definitely imbalanced. Now that I look at the three candles,
Okay.
yes, that's an imbalance. Let me mark it as such.
So something I do, Adrienne, to kind of train my eyes for imbalances is just when I see gaps, I zoom into those gaps to see if if the wicks of the first and third candle touch, because sometimes they can be so small that you don't see them and they
Yeah,
actually do touch, or vice versa. So anytime, like I said, I train my eyes to see gaps. When I see gaps, I automatically think imbalance. And then at that point, I go in and see if the first and third candle wicks connect in any way. And if they don't, have an imbalance. If they do, I don't have an imbalance.
okay, makes sense. I've just been, if I see a open, I say, oh, that's an imbalance, but that's not the truth. That's not true. This is like an eye opener for me because, yeah, that's important. That's important. So yeah, that is an imbalance, Kim. I missed it. That is an imbalance.
Okay.
Yeah, yeah. Do you see any more?
And
I need to mark
do you mark it to the other candle or
right here.
okay.
Yeah, I had it over too far. Okay, that's a weekly. This it don't really matter if it's a weekly or I like to mark it if it's on a weekly or a um and it may not make a difference. I just like to mark it if it is on a weekly or a monthly. Okay, so
Mm-hmm.
I have everything marked on my weekly. And what I mean by everything is my zones are marked, my highs and my lows, my highs and my lows. And I have two imbalances in between. And I have a weekly key level here.
Okay.
Now we're going to drop down to the daily. This my, I gotta mark this. This is my daily low. Okay, so this is my daily low. My daily high is close to this zone here. Now I'm confusing myself because I want to say this is the high, but it's not. This is the last swing of the daily. No, it's not. This is the last swing of the daily. What is your daily? I'm sorry, Kim, give me a second.
No problem.
Um, no. So my last swing on my daily is here. I was right. It's my last swing on my daily. Yeah, that's my swing on my daily. Don't get confused.
And why do you consider that the swing?
The high and the low of the daily.
Is it is it um the high and the low
Of the
of
daily
the-
chart.
okay.
This is my low here. Actually, it's here. This is the low of the daily, which is close to the weekly. The last swing of the daily. Okay, so somebody help me because I'm getting confused right about here. Because I want to say this is my last swing of the daily. But then this is the last candle on the daily. No, this is my last swing, the high and low.
So
This is the low and this is my high.
okay, I'm gonna take off my student hat. I want you to zoom into the weekly or the monthly or the weekly. You can do the weekly.
Do the weekly.
Okay.
Okay.
All right. So, and then erase that. Yeah, erase that. Delete that. Okay. So if this is your, hold on, let me get rid of it. Okay. If this is your swing, right?
Mhm.
Then price has to be in between here. Where's your structure based on, now go to the daily, but I want you to keep this in frame
Daily.
and then scoot your chart over.
Oh,
And that's okay. I'm gonna delete this. Scoot your chart over just to the right, just a little bit, because you want to maintain where you are in the daily swing.
okay.
So based off of this, where is your structure in here?
Okay. Price went up. Price pulled down. Price pushed up. It's even. Price pushed down. Price pushed up. Took out these highs.
Okay, wait a minute. Hold on. Let me rephrase that. Delete that.
Delete this.
Because we're in this range right here.
The weekly range.
Where is your structure in here?
Price push down. Push down. Price push down.
Okay. Now,
So this is my.
so that's your current structure based off of, squeeze your chart in just a little bit. Okay, right there. Based off of this being in this move here, in this last swing here. So where would price need to, based off of what you just marked up, where's your swing for price to break?
Going to the upside, right?
What would you be, because right now price has been bearish because of what? Price is still bearish because of what?
I don't want to answer wrong. Let me see. Price is still bearish.
Because of what?
It's because it made a chalk up here. It changed characters up here.
Right, but it's still bearish. Although it's
still,
although price is bullish, like based on right here, right? Price is bullish. But price has not. Can anybody answer that question?
But it hasn't taken out this low.
But it hasn't taken out what the swing either. It hasn't
The
taken
swing
out,
high. Yeah.
which is right here.
Okay.
So until price takes out that swing, you're
You're so
probably
right, Kim.
going to get one more push to the downside. You
Okay, I
see,
see that.
and you see where it went before it started. Where, and what is that? Delete your line, delete your path tool.
Okay.
So
now what were you asking me? I see the swing here. So my last
what is it? Right, that is your swing.
imbalance. That's the imbalance.
And that's your swing. Price went into the imbalance and then started selling, right?
Yeah.
So price could do one of two things based off of what you just what we just talked about.
Price could do one of two things. It could break. It could take out the swing low and continue selling, or it can take out the swing high and continue to buy.
Correct.
Is that what you're asking me?
But do you see why this is not structure yet? Do you see where reason why this is not really considered structure yet?
Because it hasn't taken out a high or a low. It's like consolidating.
Correct. It did not. You identified this as the last swing. So this is pushing up, and it did give some form of structure, but then it came and then broke that structure. This form of structure. But price is still in between this high and low. So based on this, it pushed into this imbalance and then started and then gave an impulse move to the downside. So price can do, like we said, one of two things. It can continue selling. And why in my mind, I think although price was buying, so you got to watch for price to do one or two things. You got to wait for it to take out a low or take out a high, right?
Right.
So my initial thought was price was going to come up here to this monthly or weekly to then sell, but price has come and retested this initial break, feel this imbalance. So, and based on what we just discussed, this is one push, this is two push. So we're waiting for a third push.
Third push down. Okay. I've been taking my swings too high too.
You say that again?
Yeah, I'm talking to myself. I've been doing my swings too high.
What do you mean?
Like I just said, this was the weekly swing.
Mhm.
That's
So when
that's
you're doing,
high.
so when you're doing a swing, because and I think you're doing it, so you're doing this swing, and then this swing. This cannot be a swing until price either breaks this low or breaks this high. So this right here, all this right here is not really a swing. So you can't count that as a swing.
Okay.
Okay.
Yeah.
Now, if price had broken this high, that would definitely be a swing.
Okay. Waiting for price to break the high or the low.
So you got to identify the structure.
Structure, yeah.
And you have to make sure you identify, and this is where I think I see everybody going wrong. When you're posting your charts, that's why I keep telling you to squeeze it in, squeeze it in.
Okay.
You still have to remember, squeeze your chart in.
Okay.
You still have to remember you are in between this structure here. You're in between this swing. So price either has to break everything in between here and here is ranging. So
Okay.
until price gives you some form of structure, like if price had come here and then close below here, then this would be your swing high for the break. Then you would look for the pullback to then continue up here.
Okay.
Okay. So I always want you to keep in mind your higher time frame swing, because price came back to this imbalance order block demand zone and then pushed up, right? But it only pushed up to come and retest this last swing, which is also an order block. I mean, an imbalance.
Imbalance, yeah.
To possibly, and I'm saying possibly because we don't know what the market is going to do, continue back to this zone.
Okay.
And if price is going to continue selling, it is going to break this low, come back for a pullback, and then continue selling to the downside based on market structure.
Okay.
Right?
Yes.
So at this point, this would be the one push. This was internal. These pushes in here were internal, but this would be the one push, the pullback, two push, the pullback, and then the third push.
Okay.
And then I'm going to delete all that. If you squeeze your chart in, like I always want y'all to squeeze your chart in.
Okay.
And bring it down. and squeeze it in some more. Okay, so now you have this push up. So if price breaks, then you're expecting price to push back somewhere up in here,
Mhm.
or it can even continue going down to these lows. So you have this one push, you have this second push, you have this third push. But on the higher time frame, hold on. Go to your monthly, because that's on the daily.
Mhm.
And then pull it out just so I can see it a little bit. Okay. So you have this one push and you have this two push. So this could be coming back down to here to then finish the third push.
The
Remember,
third push. Mhm.
remember the second push and the second push is usually a deeper pullback. So this is the first push, right?
Mhm.
And then this was the second push, the break of this high. So this could be a deeper pullback to then continue to these highs. Or even not even those highs. It could just be going here.
Okay.
Because this was the overall push. This is probably, I want to say, probably the 618, 78, 88 of this. Oops, I don't know how that happened. Of this push down. That makes sense?
It does. So as long as I'm in the higher time frame swings, price is just ranging until one of those swings are broken.
Exactly.
Mhm.
So now go back down to the weekly.
The weekly, okay.
And actually, so I didn't mark this up on the,
I'm sorry.
I didn't mark that up on the higher time frame, but so you have here and you have here. So right now price is here, right?
Mhm.
So and then you have the imbalance marked here and then the imbalance marked here. So if price pulls back to this imbalance and then starts breaking internal structure on, go to the daily and then adjust reset your, okay. So if price pulls back into this imbalance, and there's also imbalance here, right?
Mhm.
There's no other imbalance down here for price to mitigate. However, the only other thing I see that price may go back to could be this institutional candle. But if price pulls back into this imbalance here and then starts breaking structure, I'm going to say you can probably buy it up at least to here, but technically price would need to break this high to look for the pullback to then take it up to here.
Okay.
Otherwise, this move right here, this move that's here is mainly an intraday trade, or yeah, an intraday trade. So you're just buying it back up into this order block until, and because then it could then sell back down. Does that make sense to everybody?
Yeah.
Okay.
Yes.
Because now at this point, this is just ranging at this point.
So there's no pushes. There's just one box, right? If we
So
were doing the cycles.
correct.
Okay.
because price hasn't, price, price did like break past this high. It didn't break this low, but it did break this high. However, it's really not structure because this is the higher time frame swing.
I'm swinging, yeah.
So that means price between here and here or here is ranging. So it's got to do, I mean, if you know how to trade it, if you're looking at the daily, like I said, if you're looking at this daily, and so price might create a break here and then push up and break this high, then you can at least buy it up to somewhere between this order block. And I don't know how many pips that is. I'm sure it's enough pips to trade for intraday trade. Yeah, that's more than enough for intraday trade.
Mhm.
But take your money and then get out.
Yeah.
See what happens next. Because then if price comes and breaks this low, then now you're looking for the sell back down to here. This right here could be Wyckoffing back down to this zone. Now, I don't talk about Wyckoff. I don't like Wyckoff. I don't know Wyckoff. I don't even care about Wyckoff. But
Mhm.
what I'm saying is if you're just looking at structure,
Mhm.
I'm not going to say that none of this means anything, but yes, you had a break here, but then you also had a break here.
Mhm.
And once this break happened, my thought was that price was going to come up here and continue selling down, but it did not. It came up and broke this high, but it tapped into the retest. So technically, if we're being patient enough,
Mhm.
when this happened, we should be waiting for price to come back here. That should be our instead of trading all of this, instead of trading all this, we should be patient enough to wait for price to pull back to, because this is our fair value gap, right?
Okay.
So either price is going to pull up in here. The best option is for price to, as it did, pull back to here or pull back to the, like there was the close of this gap and then sell. That should have that should have been the actual entry we should have been looking for because price is selling, right? So if we're looking for sales and sales only, we should be looking for price to pull back into the last swing to start selling again. Does that make sense for everybody?
I have a question, Kim.
Yes.
So how many times can price go into that fair value gap? Because it looks like it tapped in. Go ahead.
Did it, I don't think it tapped into the, hold on, let me delete my stuff. Oh, it did. It did. So really
Okay.
you want the gap to be filled completely.
Okay.
So even if it came to 50% of that gap, there's still a gap left in there.
Kim, I have a question, or Adrian.
Yeah, ask Adrian. I'm going back. I know, I'll listen. Go ahead.
So you don't see three daily pushes down already? Did you said you was looking for another push down?
No, if we go to the weekly, Adrian, or it might have
Okay.
been the monthly.
Ooh.
So really there's one push down. But when we went to the daily, And
So
and
like they,
I know that like we had this, right? And then we had this push up, and then we had that wick, and then we had that push up, and then we had this whole push down. And let me start over because price technically did not break until here. So that's the one push, that's the push up, and that's the second push. You see where that came from? So one
Yeah, I was
broke,
talking about the daily though.
but but it is going to be on the daily because I can see it on the weekly. Now go down to the daily
okay.
and let me. So this was the break. So that was the push down. This was the push up, and that was the push down. Price pushed up here, pulled back, and then pushed up. So that was the swing. These are the internals, but this is the higher time frame swings. And then once that broke, that became the low. That makes sense?
Yep.
Okay. So now that this is pulled back to here, my guess is price is probably going to sell down to here. So with that being said, I would be looking for a pullback to continue selling. So mark up your order block. Now, we're not saying that that's going to happen, right?
Right.
I'm just saying when price gets here, we need to assess the situation. If price does not break this high, pulls up in here, and then starts breaking structure, then we know it's a sell time. It's time to sell. Again, I don't know all these moves for Wyckoff. I think Alicia knows them. Alicia, you know these moves? All I'm just saying is price based on structure, pulled back, gave an impulse move to the downside. So we can wait for price to get back in this zone, create some form of structure, and then a break of that structure to then sell down to this zone. If price pulls back up into this zone and breaks this high, then we'll be looking for the optimal trade and entry to pull back to then buy back up to these zones. Even with this imbalance, so price may come into this imbalance to then buy up to somewhere up in here. So when you're trading, it's know where you are in your trade. That's what I mean. When you know where you are in your trade on the chart, you know when to get in and you know when to get out. And I know that we've, based on the, based on our market maker cycle charts that we've, and let me unshare your screen real quick.
Okay.
I'm gonna let you finish, but based on, I know we said based on our market maker cycle, right? We still could push that back down to here and then start buying. So if this is giving us our cycle, we have this one cycle here, we have the second cycle, so we're expecting a third cycle. We're expecting our third cycle. And then yes, it did give us a double bottom here. And since price did break this high, we could come back down to here and get another double bottom before buying up. That's possible. Is Roger on here? Oh, I don't think she is. Oh, let's see. Oh no. Okay. So yeah, so price could do one or two things. Price could come back down to this key level that I have marked up here. Price could come back to this, fill this imbalance, or price could, and based on this move here, because this is the imbalance right here, this has already been mitigated. This break here, this break here, price has already pulled back, gave the healthy price action. The only thing that doesn't have healthy price action right now is this imbalance. This has already been mitigated. So this could pull back to this key level, pull back to this zone before buying back up to the top side. Or it can keep selling. Like I said, it came and mitigated this break here to then continue selling down. So it's one of the two is going to happen. Price is going to pull back here, and maybe it'll pull back. Maybe it will. Where's my path tool? Here we go. Maybe it'll push here. Maybe it'll pull back here to this order block, and then maybe it'll sell back down. Or maybe it'll break above this key level, pull back, and then keep buying back up. Because technically price still hasn't broken this high. So this can continue pushing back up to this monthly to either break this high. If it breaks this high, then this is all fair game right here. But from what I can see, based on this daily candle dropping, I'm expecting price to pull back to this key level. Like my key levels are still my clutch. Key levels are still clutch for me, right? So once price gets or pushes back down to this zone, then we can reassess the situation, whether it's going to push back up to here or whether it's going to break this high to continue buying. Break above my zone. Let me say that. Break above this key level zone. I'm trying to think. There's a video I think I can share. I should be able to share with y'all. For me, if it's above the zone, then I'm looking for buys. If it's below the zone, then I'm looking for sells. And it's all based on what the structure is looking like. Ooh, what the structure is looking like at that zone. Oh, wait a minute. Did somebody say something? Oh, okay. So yeah, so it's all based on what the structure is looking like at that zone. So if you mark up your key levels, let's wait for price to get to that key level. So matter of fact, I'm just going to push, no, not that one. I'm going to push this here at this key level. Once my alert goes off, then I can, now I will say this, if price pulls back up to here, and I will set an alert up here. Whichever one comes first, whether it's here or here, then that's when I will hop on the chart, go down to a smaller time frame, identify the structure, and trade accordingly. If structure is has created has broken above, then I'm going from this one to this one. Oops. And I'm taking my money once I get there. So we're talking approximately from here to here, 250 pips. If it's going to continue, then I'm going from here to here, which is approximately 110 pips. If it's going to continue, then I'm going from when it breaks above here, from here, that's 87 pips. I'm still going to go right from here to here, but there could be something in this wick that can make it go pull back. We just don't know right now because we're on a higher time frame. But based on, let's go to the 4-hour. And let me go back to the daily. Hold on. Let me mark it up. So from here to here, there can be something in there too. So based off what we just talked about, price could tap into this order block, pull back. So I would definitely just take my money, take my 95 pips, and then if it pulls back, then I will wait for price to get back here because at this point, price is bullish. So we should be looking for buys. No more counter trend trading. No more counter trend trading. We're on the higher time frame. If price is breaking above and it's going bullish, then we look for buys. So with that being said, it all depends on what happens when it gets back to this zone. Because as we can see, price is slowly approaching this I think there was a daily, no, it was a 4-hour and a 1-hour order block. So price is slowly approaching, and this is why I had this here. I had this here, right? This top of that order block, because I want the alert to once the alert goes off, then I can hop on the charts. So there's a 4-hour order block. There's a 1-hour order block. So once this alert goes off, I'll move it to the top of this red candle here. These two sell candles before this up move. And then once that alert goes off, then I'll hop back on the chart again. Okay. And wait for price to show me some kind of structure. Right now, this is the only structure I see based on this 1 hour. So if this keeps dropping, then I need to see some pullback. I need to see a break. I need to see a break of a high, specifically for me on the 1 hour. Then I will set my entry at this zone or whatever order block and imbalance that occurred to make this happen, this change of character to happen. And then I will set my limit and then take it up to this high or to this zone. Does that make sense?
Yep.
Now, if price doesn't give any kind of structure here, then I'm not doing anything, because price could break through here. And then once it breaks, then I'll look for the pullback and then continue to the next key level would be right here. And then that's just because that was the price came here, was support, was resistance, was support, was support. So I would take it down to 222 pips. Now, if price is going to continue selling, then the structure will show you that it's going to continue selling. You have to look at the structure. Like I said, based on there is still imbalance down here. There is imbalance here. There is imbalance order block here. So based on the higher time frame, weekly, price is already tapped into this. So based on this higher time frame, we have a bullish order block. And although price did not close, price tapped into this zone here, price could sell back down to here to give us our peak formation and then start buying. And on the lower time frame, that's just what we talked about. So price could come down to here, give our peak formation, or price could come back down to here. This was the initial peak formation, right? This was the initial swing high that got broken from that peak formation, and price has not come back to mitigate that zone yet. So price could come back down to there before giving us our move to the top side. And if I fib that move, I'm sure this is the 78 or the 88. That's the 78. This one is the 88. That makes sense to everybody?
Yep.
So if you just trade from one zone to the next zone, we're still identifying our market maker cycle. We're still identifying structure. We're still identifying our key levels. To get the optimal trade and entry. So with this push, this daily push to the downside, on the 1 hour, this is our structure. We had a push down, a push up. So we're probably going to get this push down, probably get this push up. And then we'll probably get another push down, probably down to here, or even down to here before we get our peak formation for the push back up to here. As of right now, we should be looking for sells. Price action here. And what's right there is an imbalance. Okay, so price could come back up into here. Price can even come even higher than that. If it wanted to, it could come back to this zone without breaking this high and then sell. Remember, this is the second push, so price can come back a little deeper before selling. It can not respect this imbalance, but still be within the swing before pushing back to the downside. Price may not come back up here. It may or may not. It may just keep pushing down before pulling back and then selling. So, and if that's the case, then we're looking from price to wherever or how far it goes to then selling down to here. Okay. I'm taking my teacher hat off and putting my student hat back on. Okay, Adriane.
Okay.
Any questions from anybody before we start back up? Before I become the student.
Ooh, this is good. I'm stuck on the
So,
Imbalance.
oh, wait a minute. Somebody was going to ask a question.
Yeah. So I think generally where I get confused is when it's in between the swings and I'm trying to determine just what you what you just went over is where I get confused sometimes.
Don't trade it. Identify your swing. Once you identify your swing,
Mm-hmm.
wait for price to come back to that swing, or mark if you know that this is your last swing and this has been bearish, this is your last swing, you can set your limit. You can set your limit, put your stop loss up here, and wait and see how price react. It's either your stop loss or your hedge. You can do one of the two. If you put your hedge and or stop loss above your swings, price should not come and activate either one. And I think because we've been so used to trading the back and forth, I think that's where we get confused. And even trading this is trading this sell is back and forth because overall, over here to the left, this is the swing. You know what I'm saying?
Yeah.
So, but and the fact that price pulled back to the zone, but if price was going to start buying, price would have given some kind of structure up in here so once that happened, this is not structure. I'm just saying price would have given some kind of structure. So once this happened, you would know, okay, it broke a swing high, then I'm definitely looking for buys from here on out. But that did not price. The market is going to give you exactly what you're supposed to have. It's just a matter of if you know how to read it or not. There was imbalance here, there was imbalance here, and then there's imbalance here. Which imbalance do you take? If of all the videos I've watched, you still want to take the optimal zone, the highest zone. So you want to take the most what do they call it? The most extreme imbalance. That's the most extreme imbalance. Price tapped into it and then sold. But the most extreme entry is the retest of a swing. So the fact that price came to the extreme entry and sold, my guess is it's probably going to keep selling. That's my guess. Now, I'm just guessing. I can't predict what the market is going to do. I can only trade what I see and not what I think. And what I see is price never broke this high. That's what I see. So if price pulls in here and then keeps buying and breaks this high, once this high is broken, then I'm going to be looking for the extreme pullback or some kind of pullback, imbalance, order block, whatever caused this break. I'm going to be looking to get in to that buy back up to these zones. So I can only trade what I see and not what I think. So I will be waiting for some kind of structure to form, look for a change of character, and then possibly buy, or wait for structure to break through, pull back, and then possibly sell. I'm trying to make it so that it's now, I know that Adrienne was explaining the process because because the rules of this engagement was to teach me as a beginner, like me not knowing too much about anything. I just know the basics. I know what a pip is. I know what a lot size is. I know, like, that was the basics. But I want you all to get it so that it's so simple. Like, I want you to be able to explain it where it's so simple that unshare your screen one more time. I want you to be able to explain it to somebody that doesn't know how to trade, because then you'll understand it a lot more for yourself. And I know I have all these lines on here, but if you just go from one zone to the next, that's really as simple as it gets. Not even including the market maker cycle. And I think y'all all know the market maker cycle. I think you all get it. Even if you say you don't. I'm sure. And correct me if I'm wrong, I'm sure everybody here understands market structure. Correct? Correct.
Yes.
Okay. Let me just go to the daily. Anybody who don't understand market structure? And I know I've said this, but I'm gonna say it again. I'm waiting for price to pull back here. And then the next, if it's gonna break structure, then I'm buying it up to here. That's how simple I want y'all to see it. I'm buying it up to there. Now, whether you take your profit there, because the one thing I do notice about everybody is that y'all do not take your profit. You waiting for it to see it run, to see what's going to happen, take your profit. That's the only way you're going to build your account. If you're waiting to see what happens right here, and I'm not saying that you can't, because you can. If you're waiting to see what happens right here, then you might lose out on some money. And trust me, if price is going to break above, if price is going to continue breaking above, then there's going to be, and not always, but there would be an opportunity to get in from here to here. So one zone to the next zone. That's all I can say. That's the most simplest. That is what helped me become a profitable trader. Trading from one zone to, and every time I try to remove my zones, but you have to remember, I'm an intraday trader. So even based on the market maker cycle, yes, we can identify when we get our peak formation, to then start pushing to the top side. But I'm not interested in being in a sell when it pulls back. I'm just not interested. Okay. So even with the market maker cycle, I want my money within the week. And sometimes I miss out on some of that money because I'm not on the chart. But there was this impulse move. This was the area that's mitigated. So this is where I'm expecting price to at least come back and buy up. But looking at structure, I'm at least looking for it to buy back up to here based on structure. Based on here. That's as far as I can see. And then once price gets here, if it starts to create low structure and then break structure, then I'm expecting it to at least go down to here. Because this is one push, this is two push, and then this would be the third push. That's to my 78. If price decides it wants to go to the 88, then we can trade that accordingly as well. $123 pips. And remember, I'm usually on the 1 hour. This is another thing I see, that everyone's usually on the 15-minute. Of course, you can be on the 15-minute, but I think y'all are afraid of, if price comes here on the 1 hour and then pushes up, that you're going to miss out on something. But if there is no structure formed, you're not going to miss out. I promise. I promise. Don't go to the 15-minute until you identify structure being broken. And you can use whichever. So based on this, price came here, pushed up, and then broke here. So price could come back to that zone. And I marked up this zone here. Just because that was it was at the beginning of the imbalance. And if you want to mark up both here, you can. And as you can see, that is the imbalance. So price could push there, and it's not just filling the imbalance. I'm not big on being the imbalance trader. However, if it is in confluence with price action, meaning price broke here, and then pull back, that's just confluence for me, that maybe price will come here and then start selling. So does that make sense?
Yes.
Y'all sure?
Yeah.
Can you repeat that?
I mean, I guess essentially you're saying that you don't target the imbalance as I guess you more so target it as a reactionary point and not, I don't know. Go ahead and say what you're saying, Ken.
So I'm just saying that I'm gonna mark up. It's a level. It's a key level. Price broke structure and pull back to this key level. Of course, this is a 1 hour key level. So it may not hold as strong as a daily key level, but I know once price gets here and it's in confluence with this imbalance that's right here, but it's more that this is a key level because price pushed up and then broke through than imbalance. I'm looking at it more that price, this was the move that sponsored this break of structure for price to pull back to then continue selling. But right here is where I need to set the alert to then go down to the 15-minute to look for more structure to see if it's going to give us a change of character to then continue selling to the downside. That makes sense? So right here, this was the area that sponsored this break of structure. But, and let me go back to the hour. But then you also have this little minor zone here, because this is where price flipped, pushed up, and then broke. So, but this break right here, well, this would be the break. So this right here, this candle right here broke both of these lows. So price can come back anywhere in between here and here to then start selling. As long as you know that this is your high, and then this was the first low, and then price broke here. And then, so price, this wick came, didn't break this low, but then this candle came and broke both of these lows. So that is why you can mark up that zone. I'm not looking at the imbalance. I'm just looking at the zone where price can come back to. Again, it can come back up into here and then, so if you wanted to wait for price to break back below the zone and then sell, you can wait. That's what I would do. But I would definitely be waiting for price to show me what it wants to do in this area before getting in the trade to buy or sell. And would I trade from here to here? No, it's not enough pips. I mean, I'm not gonna say you can't trade, okay? Because you can trade 30 pips, and depending on your lot size, you can make it do whatever. But I wouldn't trade it until price got here. If on the 15-minute I saw some internal change of characters, or I don't even want to do the internal change of character. It has to break that whatever low that was created. It may not be a swing low, but it just may be a low. So it would have to break the low that was created. Yeah, the swing low, sorry. That was created with price moving back up. And then I would look for the change of character for the continuation of a possible sell. If that doesn't happen, then I'm looking for the break of this high above this zone. Then I'm going to buy from this zone to this zone. But as of right now, price can pull back to this zone, or this zone, and then start selling back down to this zone. And maybe I'll do instead of, I'll do a sell zone so that I'm not confused on my zones, my major zones. So I would be looking for price to pull back to one of these areas to possibly sell back down. And as you can see, because you're in between the zone, you're in between the two key levels. So you definitely have to trade the trend if you're going to trade in the middle.
But if you're looking for a sale, Kim, you would be looking for it to, okay, so it already broke that level, retrace back and fall, breaking this 50%.
Say that again.
I see that it's retracing back up that to your level.
Yep.
But we're looking for a sale. That's the trend.
Correct.
Okay.
You're looking for the sell. So price is going to pull back to your 50%, your 618. It might even pull back to the 78. And then you look for the change of character to then sell it back down to these low, to this zone, to this negative 27.
Okay.
Or this zone, whatever, to your zone, to your key level.
Okay.
And remember right here, I said based on here, I have an alert here. But if I'm looking for my institutional candle, we have these two red candles. So price could just come to this red candle because this one has already been mitigated. Right? So price could come back to this, which is at this zone, to then push back to the top side. So once price gets to this area, you just looking for, you go down to your 15-minute, you're looking for structure. So you got a break of this low, and then you're looking for a break of the high. So you set your limit, set your stop loss below the zone, and then you can buy it back up to whatever the market is given. Whether it's going to be here or whether it's going to be back up to this order block. But my recommendation would be to just take your profits at the next zone. Or if as price is pushing back up, if it leaves some type of imbalance or order block, then you just take it from there up to that imbalance or order block. Order block for me, I would just be looking for the order block, but just keep identifying the structure. Keep identifying the structure. So where did I put my other limit? I'm going to set the alert here.
Kim,
Huh?
when you say create the structure, since price currently is not at a key level, when it's at a key level, would it only create either a peak formation or a double bottom or double top, depending on if you're going bearish or bullish?
It could. It could. And that's why I'm saying that price could come back up here and give a peak formation, because then this could be the,
But it wouldn't create that, being that it's in between, correct?
if it pushes back up here to this, because this is the swing, right?
Mm-hmm.
If it pushes back up here, it has to break this high right here, this wick.
Right.
It has to break that high. But if it doesn't break that high, then this would be the peak formation. Like it could come here. This would be the peak formation for that. Or it would give you this internal peak formation for the continuation of the cell.
Okay. But even where you have that red line, the red box,
This one right
that,
here?
that minor key level, yes. Even if it reacts off of that, so
Yes. So
it would not.
Go ahead and
It
ask.
would, no, I'm just saying, would it there? Would it, like you have, it would create
The peak formation?
yes, uh-huh.
Yes, it can come back here and
Okay.
create a peak formation. Now, remember, peak formations can be one of three ways. You can have a double top. And if you get the double top, it's best to wait for price to break that the neckline, and then you can continue selling from that neckline, or it can create, it could be like this and then break. So it'll break the high and then come and give you a change of character. And then you can sell it from, once you get the pullback, identify the imbalance or order block that caused this break, and then you can sell it from there, right? Or it's going to be, and then it's going to push down. So it could just come up to an imbalance or order block from here and then sell. So the peak formation can be one of three ways. Did Rogia join? Oh, she did. Rogia, any input on how these peak formations form? Let me see if I can find one on the chart, because I hate looking at I need to find it on the chart. Hold on.
I can't eye them down, but it's always after they've created. Like when it's creating them, that's when I get confused.
So like right here is a double bottom. So right here is the double bottom, right? Because this was the last price wicked. Price never, hold on. Price never closed. Now, this is the neckline. Remember I said you can get the double bottom. This is the neckline. So once price breaks the neckline, the pullback, once price breaks this neckline, you got a double bottom, the pullback, and let me see if I can see it on the, okay. So this was the bottom. Price broke this neckline, right? And what would you look for price to come back to? I always say it.
The break of structure, the part where price broke out.
But what specifically, like where would
The
would
order or imbalance?
Nope.
The optimal.
Nope.
Institutional
No.
candle.
Who said it?
Institutional candle.
Institutional candle. So once this broke right here,
Mhm.
your institutional candle, either you can set a limit or set, oh, it's a mosquito. You can set a limit or you can set an alert. So when price pull back to that institutional candle, and I'm gonna make this big so I can see it when I get to it. Okay. And then you go down to so this was your zone. Let me go back to the 4 hour so I can see it. Okay. So this was your zone. This where we marked up the institutional candle. And what I would do was just zoom in and say, do I have any imbalance in there? Because if you want to narrow it down, there's a little bit of imbalance there, right? And trust me, price could come back to here if it wanted to, but usually when you have a double bottom and it breaks the neckline, it's usually coming back to where the neckline is. So if I'm just looking for my institutional candle based off of that daily, this is where I would set my limit. This is where I would set my limit. And of course, my stop loss would have to be below this swing because that's the internal swing. So we had here, here, and here. That would be the last form of structure price pulled back to, and then you can buy it up to, and I would say buy it up to here, but if you want to just use your fib, so you say this was the move, that was the high here. And if you wanted to just buy it up to the negative 27, that would work just the same. That's 195 pips. I'm not big on the percentage of, the trade, but if you're just identifying structure, just what y'all already know, right? This pushed up based on structure. This gave you structure here, pull back, and then brought up. So that is the double bottom break of the neckline. You look for price to pull back and then continue buying. So you can buy it back up to these highs. Again, look for your institutional candle. And I'm just going to put it here, wherever that may be. Institutional candle. It's also the violated order block. Same difference each way, okay? And if you're on the 1 hour, and if you're on the 1 hour and you don't take, say you don't take your, you know that this is structure, right? You're on your 1 hour. Oh, wait a minute, hold on, that was wrong. You're on your 1 hour and price pushed up. You see it's let me just zoom in. And price pushed up. You've identified your structure. I'm still feel like I'm doing it wrong. Hold on. If it broke here. Okay, that's right. So, wait a minute, I didn't do that right. Hold on. Hold on. So based on the daily, let me take all this out. That's confusing me. Okay. So this was your institutional candle. Let me delete this out. You go to your 1 hour. So price pushed up. This was your institutional candle. Okay. Actually, you have another institutional candle in there on the 1 hour. So if you want to get a sniper entry, there it is. This was the institutional candle that caused this break of structure. Okay. So now when you fib this move from here to here, and you want to take it to your negative 27 based on the 1 hour, even if this right here, even if you got a pullback, you see that you have a 1 hour order block. So price would have to break this low in order to invalidate the continuation of the buy. So if price tapped here, say it didn't tap your negative 27 yet, right? And you started seeing it come back, don't be afraid that it's going to start selling, because one, it has to break this low. You have a 1 hour order block. So your thought process is, oh, I have a 1 hour order block. Price may pull back into that order block to continue. So once price push through your negative 27, if you didn't take profit at that time, right? And you know you have a zone right above that, and you got this impulse move, it left this imbalance, it left this institutional candle. Once you see this impulse move, you can stay in the move and then take your profit at the zone, or you can take it at the negative 618. I say why did I say all that? I said all that to say, if you don't take your profit at the negative 27, you're in between zones. You're on your 1 hour. The 1 hour gives you a push, another impulse move up. It gave you an order block, and then it gave you another impulse move. Stay in the move and then take your profit at the zone. Set your TP at the zone. And yes, price did go further up, but if you wait for price to now break out of this structure, right? That structure, then you can set your next limit. So this already tapped into that institutional candle. There's imbalance. It came back to close that imbalance and then brought up to the next zone. Just always identify the current structure, especially on the 1 hour. you already know that what's to the left, right? But once you keep getting the moves up, unless it's breaking. So right now, we're looking at it breaking this low right here, right? But that's not the structure. The structure is here. This is the swing. It's got to break this low. And if it breaks this low, then you would, if it breaks this low, then you know it's got to pull back. So you would take your profit on this move up here and then look for the break to then sell it back down here. Like that's, I know I said a lot, but it's just that simple. Like it's just that simple. And if you don't see it as being simple, I want to know, because I want to know how to better explain it so that it is just that simple. And in this case here, if you want to use your fib, you can use your fib, or you can use, it pulled back to the 618 and it went to the 618 at the key level. So it's from one zone to the next zone. And I don't even have to go to the 15-minute for any of that. I mean, I can if I want to. Okay. And as you can see right here on the 15-minute, what did it do? It pushed up. It gave you a double bottom. And if you are unclear on the double bottom it gave, you see right here, price came and stopped here. Price wicked that low and then gave you a bullish order block. So now price wicked this low, did not close below. It actually closed above. This closed above, gave you a bullish order block. That's your peak formation right here. So that means price is likely, and it's at your, one, it's at your zone. Two, it's within your swing. Three, it's gave you this bullish order block at a key level. So price is probably going to pull back somewhere into this order block to then start buying. This order block didn't give you the look, but this order block right here gave you the order block and the imbalance. So if you wanted to mark up from this order block and cover this low and take it to the next zone, that's a 7% trade. Now, does that make sense? Do, 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 do. Do, 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 do. Did that make sense?
Oh, you're waiting for us to respond, yes or no?
Yes. I'm like,
I was like, is this Jeopardy news?
but did that make sense about this order block with this imbalance is where you could have put your entry. This gave you an order block, but it did not give you an imbalance. It didn't give you anything to say, okay, this is a buy. But this order block gave an imbalance for you, that you could have set your limit at the order block, covered this low to then take it up to the next zone. Did that make sense? That's what I was asking.
Yes.
And who asked me that? Was that Tasha? Was that you to ask that question about not how you're not identifying the peak formation? Who asked me that? Who is that? I think that was Tasha.
Wait, what did you say? Wait, what? What happened?
Was that you to ask the question?
Yes, I did. Mhm.
Okay. As you can see on the 15-minute, this was the institutional candle. Price came there and went. I was I was saying to you, I was explaining to identify the peak formation. Price came here, pushed up, came here, wicked this low. Or you can just mark up your institutional candle, set the limit there. Cover the low. If you miss that entry, then once price came here and gave the peak formation, it wicked this low and then gave a bullish order block. The bullish order block did not give any indication that price was going an impulse move. However, this order block gave an order block and an imbalance that you could have set your limit to, which was right here at this order block, and cover this low for the for the continuation of the buy to the top side.
Again, I see it all day when it after it's printed. But when these candles are being printed, I just
Are you, can you see do you understand the institutional candle?
yeah.
This was the last down candle before this push up.
Mm-hmm,
You identify the institutional candle as probably the easiest thing to look for.
mm-hmm.
And you can just set your limit based off of that.
Okay.
Now this stop loss is a little more, or the hedge would be a little more, but then you would just adjust your lot size to compensate for 61 pips.
Okay.
Or wait for price to get to your institutional candle, look for impulse moves, and then you'll get a smaller stop loss or hedge that way.
Does anybody else struggle with that?
I do. I don't always see the institutional candle either. And I didn't know that until Kim just said to look for the institutional candle and mark it and then wait for price to get there. Yeah.
Yep, wait for price to get there. I mean, if you're just identifying your structure, you have an imbalance here. You're looking for price to pull back into. There's imbalance here as well, and then there's imbalance here as well. But if I mark up my institutional candle, the institutional candle is always, usually 9 times out of 10, is going to give me the location I need to look for price to react. And once I saw it tap into that institutional candle and gave me this bullish order block, my thought process is this gave me peak formation, double bottoms. This gave me double bottoms. This wick to low gave me a bullish shorter block. I could have easily just said, put my, now I'm not one who put my entry at the close of the candle. I know a lot of people do, but you could have done that with a 49.50 pip stop loss for GJ. That's a lot of, that's a big stop loss. But again, I'd rather for you to just see it, cover the stop loss, adjust your lot size to cover what you're willing to lose, and then take your TP to the next zone. And hold on, let's see, let me delete this. Let me go to 4 hour. Let's see, y'all see what happened in a matter of market open.
Yeah, price pushed up.
Mm-hmm. So price pushed up. Okay. Now there's no wick on the bottom of that. So I'm really speculating that price may push up here and then push back down to, oh, did I move it? Why do I keep moving it? Oh, because on the 1 hour. Okay. Let me just put it here on the 4 hour. I am expecting price to come back down here to the 1 hour zone and then push back up for push back up to, this is my thought, and remember what we based on and we'll see based on if this was our peak formation and we broke this level of structure, this will be this could possibly be cycle 1. So if cycle 1, remember cycle 1 generally pulls back to before cycle 2. We're going to trade it as we see it. Okay, we're going to trade it as we see it. Now, I will say if price does not break this low, because this was where the impulse move happened. This was the institutional candle or order block that caused this impulse move. This could possibly buy back to these highs. So again, based on what we discussed earlier, this is our 1 push. This was our 2nd push. And then we might get our 3rd push to then give us our peak formation to buy back up to either this order block or this high. or it may continue going based on what we talked about. So one of the 2 or 3 moves.
Yeah, I got confused with that push because of that impulse candle. Yeah.
That's just our one push. And then we got another push. So we should
Mhm.
be getting one more push before this move up. I mean, I would even go so far as to set a limit right here to at least buy it up to this zone.
Okay.
And again, on the 1 hour, if we're watching it and it breaks through that zone, matter of fact, once it breaks through here, once it breaks this high, then my guess is it's going to start continuing to buy up to the top side. So now that price is here, we said there, and then oops. We said, okay. I said based on price is going to come back. So we're saying back up in here somewhere, right? This may push up to here. So either here or here, one of the two, to then let's go down to the 15-minute. So we're looking at peak formation here. We got the one push here. We may get a pullback to this order block, get a second push, and then we may get a third push. And remember, it could come back up to here. As long as it doesn't break the high, remember we said this, we'll look for the possible sell back down to here and then give us a peak formation to buy up to somewhere up in here or higher. Or higher, back up to the monthly that we talked about. So this would be the first move. This would be the second move. You look for a deeper pullback, and then you might get the third. Then we'll look for the third move if price is going to continue. Now, this was our swing, right? This was our swing. So if we get a third move at the break of this swing, then we're looking for the pullback. If it breaks here, then we're definitely looking for the pullback for the continuation of the buy. And I think it's the zigzag, the back and forth that gets everybody. I know it does, because I mean, I used to struggle with it myself. So if we break this high, because remember, I guess we did get our third push. This will be the first push. This will be the second push. This will be the third push. It's pushed up, but this is your swing. that either price has to break this low or price has to break this high. So if price comes here and starts giving internal breaks of structure, then we might be looking to go down here. Or if price, again, if price breaks this high, then we're looking for the pullback to then buy some more. It can get confusing, but if you just mark up, like I have all these lines on here, oh, I need to keep that on there. But if you just mark up your zones, your key levels, mark up your, I say if you just mark up your key levels and you go from one zone to the next, I think that would alleviate a lot of the confusion. And mark up your structure. Mark up your last structure. Where are you in that zone? Are you in between? Are you at the high? Are you at the low? And then once you're at that high and low, identify the structure that's right there where price is. And that's the best way I can explain it. Oh shoot. Dang, how many alerts do I have on here? Yeah, that's the best way I can explain it.
That's a good way to explain it too, Kim. Thank you for that, because now that you pointed that out, I have to understand that if I'm between my daily zones, price is still ranging on a lower time frame.
Mm-hmm.
So I have to determine.
And then once you get to that high or low, then identify the structure on the lower time frame at that zone, at where current price is. Like, you know that you're here, you know that you're in between here. So once price gets here, then I can say, I can go down to a lower time frame to see what the structure is looking like. Because all this right here in between is going to confuse you. Unless you got in at this zone here, at this institutional candle here, or there was a little imbalance right there. So price got in. Once you got in here and you got in the buy, like all this back and forth will not even, because now you're taking it to from this low to possibly this high. And this is a whole counter trend trade. But I get that you don't want to, let's see how many days this took. I get that you don't want to, that's 51 days. Like, you don't want to sit and wait for something to happen for 51 days. I get it. I get it. So, but once you start getting, and although this did not break, I guess this could have been on a lower time frame, some form of structure. Okay, so yeah, on this 15-minute, there was this break here, right? Once you had that break, I marked up the institutional candle on the lower time frame. This one has already been mitigated, so I probably would have kept this one to then do your fib. I would have done it from the low to the high. I know Todd probably would have done it from here because this was the impulse move that started the break, right? But I personally would have done it from the low. This was your institutional candle. It's at the 38 or the almost the 50%. And then you could have taken this from here up to the -27. If you're not using key levels, if you're not using where did I put it? Where was it? I don't forgot where it was, just that quick. Fiddlesticks. Okay. But if you're not using key levels, at least use your fib. At least use your fib. Oh, okay, Regia. So now that price is here, I'm like I said, I'm looking for price to maybe pull back up in here. Again, it can pull back here. But I'm looking for the sell. We broke structure, we should be looking for sells. Once we start breaking, I would even go so far as just to set a limit, just to and set it above this high. And then take it to this low. When it's selling, look for sales. And then once price got to your zone, see what happens. And then if it starts breaking structure, because we know this impulse move, I'm actually going to set me a limit down here and expect to buy. I'm going to set me a limit. But if you want to take a sell, I would say set an alert. Because this right here is not, I don't know, it could possibly. Let's see if is there news. Forex Factory. Oh, there's JPY news at, well, a yellow folder at 750. So this could easily just be a quick breakthrough all of this. I am personally going to wait for price. I'm not even going to set a limit. I'm going to wait for price. I'm going to set an alert for price. Well, I already have the alert set. To come down here to this zone. And then I'll hop on the chart to see what the market is giving. That's what I'm going to do. Monday, JPY News. GBP News. More JPY News on Monday. So yeah. All right. Any other questions?
Kim, what video were you referring to? You said you would post or something earlier.
There are, let me, I'm gonna drop it. I'm going to drop 2 YouTube videos, well, YouTube channels. And let me drop this in YouTube. Because I like the way she does. She talks about key levels. She doesn't mark them up so much, but she also just talks about waiting for price to come to you and then trading. And then the videos that Todd played yesterday, which was Pips of Persia. And that explains, I'll post the 2 videos from there in the chat. So yep, I'll post the other 2 videos in there once after the call. So at 7:50, there's probably going to be a drop for DJ. Either from here or from here or from here, or it might even be up from here. We'll see. Probably from here. Any other questions?
Thank you, Kim.
You're welcome.
Thank you.
You're welcome.
Thanks, Kim.
You're welcome.
Thank you, Adriane.
I'll post this as soon as it
You're welcome.
renders, so it may take a while because it's been
See you guys.
See you. Bye.